All right, what happens when you add alternatives to your portfolio, as told by Brad Johnson with the Alternative Investor? All right, historical portfolio risk and return mapped out here. I know there's a lot going on, so stay with me. All right, so when you add hedge funds, real estate, private equity, maybe venture capital, private credit, those are alts. So what happens when you add 20% of alternatives to your portfolio of stocks and bonds, perhaps? All right, so here's your stocks and bonds broken down by percentages. Here's the volatility. Here's the total return. If you add a sleeve of 20% alts, this is what ends up changing down here. And so you end up shifting your returns up and to the right fairly dramatically. So you're shifting your returns higher, and you're not getting a giant leap in volatility, which is the risk of the overall portfolio. You have your annualized return up here, once again, and your risk down here. Now, is this real risk? Probably not. It's just the movement of the actual investment. Down here, you have the liquidity spectrum, where we cover all the alternatives: hedge funds, real estate, private credit, private equity. Those are 4 major food groups, and they're graphed here on more liquid to less liquid. Hedge funds, usually pretty liquid like stocks. You can get out fairly quickly within a redemption window of that hedge fund. Real estate, obviously less liquid. You can't sell your property extremely quickly and get out. Private credit, I would actually switch this. Small mistake. Private equity, you have multi-year lockups and usually anywhere from 7 to 10 years. Down here is the cash flow spectrum. You're getting more income with private credit because it's debt. Real estate's in the middle. Hedge fund strategies often don't have any income. Same story with private equity. What to remember? Liquidity can constrain your exit, right? You can't get out of some of these asset classes really quickly. Fees reduce long-term outcomes, but sometimes you want to pay fees to get higher returns, as we talked about up here with your 20% alt sleeves. And of course, valuations can be less transparent than public markets. Public markets are audited. You can get those reports quarterly. Sometimes alternatives, they come a little less frequently. All right, if that was interesting, go ahead and subscribe.